I was a very passionate dividend investor. Once you get it, it's really addictive. And you see like, I don't know, in 10 years, your annual dividend income will be 20,000, 30,000. You get all excited, right? But every month you invest more. And that's great. Amazing dividends, right? 8, 9%. Juicy. Love it. But total returns? Actually, it was a different story. Professional fund managers underperform the S&P over a longer period, right? They might do well 1 year, 2 years, 3 years, but over a longer period, 70, 80% underperform the S&P. All stocks eventually will have a downturn, right? And they start dropping 20, 30, 40%. Will you still be as convicted about it? End of last year, I decided to leave the corporate world behind me, left everything behind me, which was quite a big ask, I would say, because obviously, you know, as a luxury general manager, you have a lot of, I would say, you're really stuck in that comfort zone. You get a lot of benefits and perks of being a hotel general manager, but I thought I was too young to be in my comfort zone.
Investors, welcome back to another go-round with our masters of the market. Now this week, I'm incredibly excited to have on with me Kai from Smart Money with Kai. He has an amazing Instagram page as well as a YouTube channel. So I wanted to bring him on to Masters of the Market to, of course, talk about his journey. So Kai, welcome to Masters of the Market. Thank you for joining me. And I just want to pass the first question over to you, man, and ask you about your story and how exactly you got to where you are today.
Just like any other investor, I think, who starts maybe a different way. I used to be in my previous life actually luxury hotel general manager. So I was running different 5-star hotels in different countries. I used to live in many different countries myself. I'm from Germany originally, but used to live in New Zealand, in China, in the UAE, where I'm right now as well, in Lithuania, Switzerland, UK. So, you know, as part of hospitality, you move around quite a bit. I think the first time I started investing was when I was living in the UAE. I was running one of the hotels over here, made a bit of money, didn't know where to spend it on, and eventually thought, you know, there must be more to life than just, you know, spending all the money on everyday things. So I thought I looked into investing in real estate. So that was actually the first investment, which is kind of unusual, right? Usually people start buying the first share or an ETF or something. So I went all in and bought my first property over here in Dubai. Afterwards, did I discover ETF investing and other investment asset classes? And we'll speak about this, I'm sure, in a moment. But yeah, so that was around, I would say now 10 years ago. Turned out to be pretty good investment. Now that I'm back in Dubai, the city is growing. But yeah, that was really the first start to investing, I would say. And end of last year, I decided to leave the corporate world behind me, and I left everything behind me, which was quite a big ask, I would say, because obviously, you know, as a luxury general manager, you have a lot of, I would say, you're really stuck in that comfort zone, right? Because you have a lot of comfort, right? You get a lot of benefits and perks of being a hotel general manager. But I thought I was too young to be in my comfort zone. So I wanted to venture out of it. My wife also has her own businesses, online businesses. And I always liked the idea of having my own business, being my own boss. So that's when I left it all end of last year and focused really on the YouTube channel. Started now also another business just recently. So yeah, really going and doubling down that world. And like you, I'm really passionate about sharing the world of investment and simplifying it, right? Because there's so many, you know, scam artists out there selling you overpriced courses, for nothing. And I think it's such a topic we don't really talk about with friends or family. Still such a taboo topic in many ways. So I applaud you for what you're doing. And I try to also do my bits and pieces to kind of simplify the world of investing, get more people to really, you know, invest their money, start growing and making more money from their money. That's what it's all about, I guess.
Quite a story. I got to start off just by saying it's actually an honor to be on with you, Kai. And I want to ask you, I mean, what's it like over there in Dubai? And what's it like to travel and just really have that freedom to enjoy your life at this point?
Exactly. I mean, I think all of us who invest, you know, ultimately, I mean, at least for me, that was one of the big things to have of course, everybody wants financial independence, but we sometimes forget about the time independence and location independence, right? Because ultimately, when I had my 9 to 5, as fancy as a title I had, I was invited to all the ambassador events and really, you kind of in a nice social circle. But ultimately, Monday morning, guess what? 9 o'clock, I had to be there, right? I clocked in, clocked out like anybody else. So for me, that was very important to have that location and that time independence, which I now have. And of course, Dubai is a really good spot for it. Let's say the cherry on top is, of course, the tax benefits you get here. But apart from that, I think what I really enjoy about the place is this mindset, the people who meet here. Yes, you see all the flashy pictures of people driving their Lambos and, you know, the beach clubs and what have you. But that's just a show. Like people who actually live here, they want to connect connect with like-minded people. And the people I met here, it really inspires me to push harder in life. You know, when you think you're kind of doing okay, and you meet the people here, you're like, I felt like the biggest, I'm really losing in life. And again, it comes down to your own mindset, right? And for me, it's very inspiring. I look up to them and I want to see what I can do to push myself to get to their level, to level up myself. And that's very much the sort of mindset here. There's no jealousy, you know, back in Germany where I'm from and so on. You know, if somebody buys a fancy car, people look at them and say, what a show off, who he wants to impress, you know. And here's the opposite, you know, when people see a nice car, they stop the guy and say, listen, what are you doing? How can you afford such a car? So it's a complete mind shift, and I really love that. And yeah, so it's a really inspiring place for me. I used to live in total. I studied here. I did my university here, then traveled, lived in different countries, came back, and now I came back the third time. So I've been now a couple of months here, and yeah, been really, really loving the experience so far. It's crazy to see how fast the city has been growing. The first time I came here, it was in 2005. They were just starting to build the Burj Khalifa, the tallest building in the world, and now it's like literally every other month. You know, you see new buildings, new whole districts coming up. I think we're close to 4 million population now. I think the 2040 plan is to hit 8 million. I mean, it's crazy, the scale and the size, the speed, the vision they have. And what I also love about is that literally it doesn't matter what passport you have, right? Anyone is welcome. You see successful people from Africa, from other Middle Eastern countries, from Asia. It doesn't matter. If you have a good idea, you execute well, you can make it happen, right? So there is no prejudice on your passport, on your background. And that's really what I love about it. Politics is really, nobody talks about politics here, for better or for worse. Some people are upset about it. They think it's oblivious to what's happening in the world. I really like it. Strips away all the fluff and we focus on the things that we can control, right? And yeah, these are some of the things I love about living here for sure.
I actually liked what you shared about having like location freedom and really being able to enjoy life. And I know that that's something that investing really gives investors over time, at least. When you hit this financial milestone, your freedom number. And I want to dive into this investing talk. Where does the passion for you come from to even invest in the market and real estate? Where does this love for investing even come from?
Yeah, I think eventually I realized, while it's nice to get while I was still in the corporate world, get a regular income, it feels nice. Every month you get your paycheck, you spend some of it. But eventually I realized you're really in this rat race, right? You're kind of in the same old grind and not really progressing much. Yes, maybe after a while you get a better job offer, you get a salary increase, but you're not really building real wealth, And then I kind of looked around, and once again, I always like to look not what people say, but what people do, right? And especially successful people. And when you look at them, well, most of them, some of them, you look at Mark Zuckerberg, you could argue that he is employed in his own company, but most of them either have their own business, or if they are employed, they're really smart investors, right? They invested early, they have maybe stocks in the company that the company pays them over a period, and they kind of invest the income to build wealth, right? And having seen that more and more, I understood the value in doing so. And I asked myself, because for the longest of time before I started finally buying my first real estate, I literally just hoarded the money at the bank. And while it felt nice, you open your phone, you see, nice amount, you feel good about yourself. But in reality, once you understand the concept of inflation, things losing purchasing power over time, you understand that you should actually do something with your money. And that's why I'm so passionate about, because I think a lot of people, they still see investing as a scam. It's so risky. It's like going to the casino. And that couldn't be further from the truth, right? There's so many different ways of investing. And also something I'm really passionate about, because I'm sure you get the same, right? When they say, what should I invest in? Kai, tell me, should I buy this? Should I buy that? And I say, guys, nobody can tell you that. And I certainly can't tell you that, because firstly, I'm not a licensed financial advisor, so I shouldn't be telling you that. But even if I was, I'm not sure if I wanted to tell you that. Kind of go back to educating people about. And I almost want to do it like a buffet. Like you kind of don't give you one dish, but I show you range of dishes that you choose yourself, whatever you want to pick from, right? Because for some people, as much as I don't personally like to invest in gold might be perfect for you. Real estate does not work for everyone, and it might work for you, right? So I think there's so many different ways and approaches to investing that you have to really kind of at least understand the general gist of an investment method. And then again, you pick what works best for you, which may be very different to what works for you and what works for me. So I think, I'm really passionate about educating of different ranges of investment methods. and then finding the one that works for you. And now after a few years, and we'll come to this I guess in a moment, I tried different ways. I'm sure you have as well. Started with one way and then shifted along the way, but right now I feel quite set. But then again, probably in 5 years it might have changed again, right? So I think it's a very dynamic investing world that we're in anyway. So
with that being said, let's dive into that right now. Where exactly are you holding? What type of investor would you consider yourself? And how are you portfolio-wise set up?
Sure. So in general, I would say I'm a bit like medium risk to conservative, I would consider myself, even though it surprises some. Talk about what I have in my portfolio. So yeah, let's talk about that. So I kind of call it the 3-pillar strategy, whatever. I just came up with that myself because it's 3 major investment classes. So number 1, obviously the biggest part of my portfolio right now is locked up in real estate. So I bought 2 apartments actually at the time when I was in the UAE. So yeah, they naturally took the biggest chunk of my investments. They're fully paid off, so I have them here. They generate me a monthly cash flow, actually annual cash flow. That's the beauty in Dubai. They usually pay, it's very common to pay the rent 1 year in advance. So as an investor, it's pretty nice. You get the full rent, right? You have also the security that the tenant is not leaving because they paid for a year, so they better stay. So that's really nice. And then you have that money and then you can already put it somewhere else in the market or what have you. So that's nice. So that's my biggest part right now. Then the second biggest position, not by design, but just because that also appreciate a lot in value, is actually my Bitcoin holding. So that's, maybe throw some people off when I say conservative, but I would still, when you look at the crypto world, it's probably the most boring crypto that you can invest in, right? I used to have my fair share of little memes and altcoins, but in the end, I came back to something I understand. And once again, I'm very passionate about investing in things that I understand. And, while I can kind of get behind certain altcoins and other coins and why they maybe have a reason, I don't 100% understand them. While Bitcoin, again, I'm not sure everybody understands 100% and can explain, how blockchain is technically set up. But again, the same how I don't understand how an iPhone is made, but I can use it, right? And the same is the use case for Bitcoin. I see the use case, I can see the value behind it. So I understood early that this is something I would like to spend my money on to kind of future-proof myself, right? When we talk about my third pillar, which is my ETF investments, we'll speak about in a second, that's more the classical conservative, which I'm still sure is going to do well in the next few years. But I think with Bitcoin, I'm kind of more future-proofing myself. Of course, it's still speculative, right? It may also not be the future. We never know. But that's just my little gamble, I suppose. Lucky with the recent US elections, at least the next 4 years, we should be in a good position with that. But yeah, so that's my second pillar. And the third one is my ETF position, which I have basically 2 pretty boring standard ones, S&P 500, and recently added NASDAQ 100 to double down a bit more on the tech position. But yeah, quite, in many ways, some people might say boring, but for me, it works well because that it's really predictable, right? Let's be honest. It goes up a bit, percentage up and down. But generally, it's fairly stable, I would say. The Bitcoin is a bit more volatile, but potentially higher upside, but of course also potentially higher downside, so more volatility. And then once again, with the real estate, it is generally more stable, I would say. Of course, if there's a black swan event or some bad events happening in the region, which is also prone to some volatility, sure, that might change. But generally, I would consider UAE as a very stable, they call it the Switzerland of the Middle East, right? It's fairly stable since everybody around the world, they put their money here. I think they really make sure it kind of stays still. So I kind of have 2 very stable asset classes. And with Bitcoin, it is a bit more risky, but generally, I think big part of the volatility is also gone already, which also means the upside is a bit more limited. But yeah, it works for me, and I'm happy with that 3-pillar approach for now.
So let's talk about this for a moment, because I feel like there's a fair amount of investors who are out there who might say, okay, smart money with Kai, it'd be really smart money if you could throw it into, say, like growth stock opportunities or individual stocks, and that would surely help you outbeat the S&P 500. What would be your response to them, and why are you just with the S&P and the NASDAQ 100, I think you said?
Yeah, NASDAQ 100 as well. Yeah. Look, I mean, the name is a name I just came up with, right? I'm by no means saying that I'm outsmarting the market. It's just a name I liked, and that's it. So I'm not here, and I never pretend that I outsmart the market, and I never say that, because I think that's actually so hard, and I'm sure you've talked about that as well on your channel. I mean, professional fund managers underperform the S&P over a longer period, right? They might do well 1 year, 2 years, 3 years, but over a longer period, I think majority, I don't remember the percentage, 70, 80% underperform the S&P. So what makes me believe that me with my little laptop here alone is going to outsmart Wall Street and other big players? I just don't think so. And second of all, I also realized that while I love investing, I'm really passionate about reading the company, seeing what's happening. Ultimately, I'm also keen on building businesses around educating. I don't want to be a full-time trader. I literally don't want to spend all my day sitting in front of the screen trying to read the news and even when you read the news, you're already too late, right? You should really be inside to understand and capitalize on early price movements. So I'm not a trader, and value investing, and we can speak about it later, but I think in the times we're in, I'm not sure value investing I personally think is becoming less and less relevant because the world is in a way changing. So I think a lot of the value is really soaked up quickly with all these AI and algos. I think they recognize that before we even see any values. That's why I think people like Warren Buffett are having a tougher and tougher time to invest their money, and that's why they sit on the sidelines with so much cash trying to find the opportunities. If there was so much value out there, they would just deploy it in the market. So I think that, and yeah, for me, I really like sort of to automate my investments as much as possible, right? I want to focus on, rather than outsmarting the market by 2-3%, right? If the S&P, let's say, returns 10%, maybe if I'm super smart and pick the right companies, as you said, maybe I generate 13 or 14%. So I'm a great guy and outperform the market by 4%. But if I invest, I don't know, $100 a month, $500 a month, maybe $1,000 a month, at 4%, with all due respect, it really doesn't make a huge difference, right, in the grand scheme of things. So for me, I rather settle at 10%, which is an average, right? It might be some years more, like this year, and other years less, but on average 10%. But focus on how I can drive my top line in order to have more money to deploy in the market, right? Because if I can instead of investing 1,000, let's say, I don't know, 2,000, 3,000, 4,000 at 10%, long term, that will get me faster to my goal of financial independence than having a few more percent that are not that predictable and actually easy to achieve, as I mentioned, when most professional investors underperform that. So that's just my approach. Again, there's no right or wrong, but that works for me. I tried before picking individual shares. It worked for a while. I was really excited until I wasn't and underperformed, and I just learned my lesson, and I settled for broad market fund investing, basically low cost index fund investing, and that just works for me. And but again, everybody has to find, I think, their own sort of strategy. There's no right or wrong, but you need to feel comfortable. I heard a nice expression: you can't borrow conviction from others, right? Because again, you might be excited about a stock that you found and talk about it, read about it, and get all hyped up and invest more and more. But if that stock, inevitably, which all stocks eventually will have a downturn, right? And they start dropping 20, 30, 40%, will you still be as convicted about it? If people start talking to sell and so forth. And if you're not really 100% behind it, you might probably sell at a loss, right? When you're in the red, and that's probably the worst thing to do. And that's why it's just not for me. And I work with the strategy I have for now.
So what would you say to those investors who are out there who think they're going a little bit more safer of a direction, perhaps not just with ETFs, but the dividend stock route? Because this has been for a while, right? Everyone's looking for passive income, cash flow, retiring early off of dividends. I'm curious to get your thoughts on that, and is it really worth it?
Interesting question. I was a very passionate dividend investor for a year and a half, I would say. I was really, I think it's like once you get it, it's really addictive because especially if you start growing your passive income, right? You do these dividend projections, right? I had this graph, I had like a portfolio tracker where you can project out your dividend growth. You take the average, compound annual growth rate for the next, 5 years. You multiply that with and you see like, I don't know, in 10 years, your annual dividend income will be 20,000, 30,000. You get all excited, right? With every month you invest more, it grows. And that's great. And once again, it can work for many people. I follow myself, many investors online, and I still think it's a valid strategy. Once again, it's just when I did my numbers, I realized when I compared, because there obviously mostly you would pick individual companies, right? There are some dividend ETFs, but especially let's say in Europe, we can't really buy really good ones, right? In the US, you have better options. In Europe, we don't really have good high dividend paying and growing ETFs, unfortunately. So that was not an option. So that goes back to picking individual companies. And then once again, we come back to the previous topic, right, of picking individual winners for the next 10, 20, 30 years. That is my investment time horizon. Gets tough. And when I actually looked at some of the companies I invested in and was very passionate about, when you then compare it in total returns to the S&P 500 again, honestly, I think out of I had at some stage 15 companies. I think maybe one company outperformed the S&P. The rest, while they paid me a juicy dividend, I had companies, I remember, Realty Income, Pfizer, BlackRock, of course, my favorite smoking company, Altria. Amazing dividends, right? 8, 9%, juicy, love it. But total returns, actually, it was a different story. And once again, it underperformed. And ultimately, as an investor, I understood that, as nice as it is to get passive income, if my principal kind of flatlines or even depreciates in value long term because I invest in a company like Altria, where I don't personally see a bright future for the next 20 years. Once again, I understood that I rather have no income and grow you still get passive income through dividends in the S&P, but it's tiny, right? It's 1.4, 1.5% dividend. So it doesn't really, unless you have a huge portfolio, it doesn't really make a difference. But ultimately understood that, if it grows to a certain portfolio size, I can do a few things. I can start borrowing against it and buy more real estate or other assets that pay me a passive income, right? Such as real estate, and then get a passive income. Or again, eventually you can liquidate some, right? If we're in 10, 20 years in another bull run, I wouldn't sell it in the bear market, but hopefully I don't have to. So I have enough to kind of rely on it. I liquidate some of the funds and use it for something else if I wanted to, right? If not, it's just part of my wealth. And that's why I diversify. I don't go all in. If I would go 100% in ETF, of course, then it becomes the question, it's psychologically hard to sell, right? I think sometimes easier to buy than to sell. So if you have a big portfolio, you wouldn't really want to sell it. And that's why I do like to have other asset classes. For example, Bitcoin, where I do right now, I kind of have it on an exchange, some of it I have a hardware wallet, but there I get like a 4% return on my Bitcoin. That's passive income, in a month, it's a couple of €100 I'm getting from that, dollars, sorry, plus the rent. So I'm getting passive income, but from my ETFs right now, it's not something I need to have as an investor and not rely on. And that frees me up from having, once again, to pick the winning horse, so to say, and just passively invest. I invest every single week. So I do weekly dollar cost averaging, just to get a better average, I suppose. And I enjoy the process. And yeah, that's my approach for now.
It's interesting. As you were speaking, I'm just thinking about, this notion of total return. And I've often been speaking about this more and more on my channel, and that total return is really the only number that matters. But yet what I see, at least in comments or across YouTube, you probably see it as well, people chasing dividend yields, dividend income, whatever else is out there. What is it about, the allure of these other metrics that you think have us all so distracted from what really matters, which is total return?
Yeah. I don't want to, again, I used to be one of them myself, right? So I can't say anything too bad. And again, it has a place for some people. And I'm also a proponent for some people who maybe want to start doing that, right? To explore, to get a feel of it, while in parallel still maybe have some ETF holdings. And I see more and more people doing that. And I think in general, never go all in one asset class, because the world is so dynamic. We don't know what's going to be in 10, 20 years. Maybe companies eventually will stop paying dividends, right? Because they all understand the concept that shareholder value is better through, stock buybacks and generally increasing the share price than just locking them in through that illusion of a dividend coming through. I don't know, we shall see. So in general, I'm a big fan of diversifying. But yeah, I think it's kind of that predictability, right? People say it's more, you have less of a sort of volatility in bad times, which I guess is true, right? Like a Coca-Cola in a recession probably is hit less than, I don't know, some growth tech stock company, which I get. But again, do you invest to be less impacted in a recession, or do you invest to grow your wealth long term and maximize your money, which I'm a big fan of, right? I think I wouldn't, it's just a different approach. I think thinking is like salary, right? It goes back to that red race. You like the feeling of getting paid. And when I also spoke with people who asked me which companies to pay, everybody asked me, I want to buy monthly paying dividend shares. And even there you see already sort of a different understanding. I said, it doesn't matter if the company pays you on a monthly basis, quarterly, or annually. Yeah, for your cash flow, maybe slightly, but generally, the number is the same, right? It's a percentage of the total holding you have. So it's just how you slice and dice it. So when you chase monthly, it can, if you smartly arrange, certain companies that pay in different months, you can have such a portfolio. But generally, you want to first look at the company you want to invest in and then see the payment schedule rather than the other way around. But once again, I think it's this short-term hit to see your monthly passive income growing, which I'm not sure if that's necessarily the smartest approach in my eyes. Yeah.
So with that being said, it sounds like one really does have to come to get to know themselves as an investor, put this investor profile, as I always like to say, together so you can invest accordingly. How did you figure out your investor profile and what asset classes to invest into? Which ones make you not only money, and an ROI, but comfortable enough to sit in?
100%, 100%. Yeah, very good question. And you can read all you want, you can watch all YouTube videos you want. That helps. I think it really helps to educate yourself. Ultimately, you have to get out there and try what works, right? It's you have to get your your feet wet, right? You have to see what resonates with you. And as I said, I tried a lot of different things. I did buy some gold in the beginning. Also, I had a little bit of small gold position, but I understood it's not for me, right? It just kind of sits there in your safe and does nothing. I just didn't resonate with it. We're living in an ever increasingly digital world, so I just didn't get a concept of gold, so it didn't work for me. Then I did individual share picking, right? I went after this growth stocks, especially 2020, right? You bought the most random stocks like DocuSign and I don't know, just stocks you read and said, yeah, that's gonna pump. It's gonna be the next Apple share company. And I just kind of really followed the herd. I was really irrational, but in hindsight, I'm happy I did it because once again, I learned my lesson, right? And I burned myself, didn't lose like crazy money, but I certainly didn't get wealthier by doing that. But again, it's a learning lesson which I embrace now in hindsight. Then of course chased various, as I mentioned before, meme coins and altcoins and tried different things. Then went the dividend route as well, which I was excited about until I got the concept of total returns. And eventually, yeah, as I said, I came back to things I feel comfortable with from a risk level, from a return level, right? Because I'm not chasing a 50% return per year. Just, it's as exciting as it sounds. I know now, having tried different ways, that that's just not reasonable or reasonable to achieve with the level of risk I'm willing to take, right? If you're willing to risk everything, sure, you can go for a 100x return a year. But that's not at my stage now. I'm 38. I'm not willing to lose everything, right? I worked hard on having that, so I don't want to put everything on the line. So yeah, I think that way kind of it mitigates my risk level while still having a reasonable return. Having it passively automated as much as possible. All my buys are generally automated as much as possible. And so it's really... It works for me, but I think you have to try different things to understand what resonates with you, how much time you need to allocate. And I feel a lot of investors think investing takes a lot of time. I also do personal consultations as well. And I sometimes speak with really successful business people, over 50 years, run different companies. And I said, Kai, I want to start investing, but it's just too overwhelming. Where do I start? And for me, sometimes I'm like, it's like mind-boggling to hear that, really successful people, and they just haven't invested the time to understand the basics of investing, and they think it's too, again, overcomplicated, or it's a scam, or whatever. And I just say, please don't invest a huge amount. Start small. Even, yesterday I had a consultation with somebody from the US. They sold a company, made $500,000, and they wanted to put half of it in Bitcoin. I said, with all due respect, I appreciate your enthusiasm about Bitcoin, but please start with a small amount. So just get a feel for it, and then you can that's why I'm a big fan of dollar cost averaging, right? You grow your position over time, and that's what I did. And if I don't like something anymore with my dividend shares, well, I sold out of it and then pivoted into something else. But you can only kind of understand what resonates with you if you try different things. And that's why I'm a big fan of, trying different things, diversifying, and see what resonates with you.
So you were willing to take the risk, leaps of faith, earlier on and really explore yourself as an investor and get out there. There are plenty of investors who, I've seen firsthand, who don't get started until they are 38 years old. Sure. Would you recommend that those investors who are a little bit late to the game go a little bit more all in than, be risk adverse? Or how would you share some, words of wisdom with them?
It depends on how old they are, right? 38, I would still consider very young, of course. My goal is, also when people ask me, what is your values in life? My highest value, and it might sound selfish, but is my health. Because, everybody says their family and so on. For me, it's my health. Because if I'm not healthy, I cannot be there for my family, right? So for me, as much as I invest in my wealth and grow that, I invest every day, I exercise every day, I eat clean, I invest a lot in good food and so on, in my health, because I want to be able to capitalize on my wealth, right? There's no point for me to be the richest guy on the graveyard, right? I want to live a long, happy life. And for me, if I'm 38, my goal is to be at least 120 years old. So I have another, 80 years or so to invest and capitalize on that. So even if you're 40, right, you still have a long time horizon, right? We're getting older and older. So I think it's still early, right? Some people, okay, if you're 60, 70, maybe that's late. But even then, if you start investing, I would not take a high risk, right? Because chances are that if you're at that age, you hopefully saved maybe some money and have it at a bank account, which may not be the smartest thing to do, but hopefully you still have some money. If you have zero money, well, that's maybe not the best, but I would never recommend to go all in, because I think that's always a recipe for disaster, to be honest. So I would always try to, once again, try different asset classes, small steps at a time, and see what you're comfortable with. Now, of course, maybe an S&P 500 may not be for everyone, right? Especially, I think generally if you're younger, you may want to take more risks in a way, because if you put, $100 and you lose it, well, it hurts you for a second, but probably next month you get another paycheck and you can try again, right? And you make your experiences. So for a lot of young investors, I understand that S&P might be very boring. They hear, 10% return on $1,000 that they invest is, $100. Not really sexy, right? It doesn't really resonate with them. And again, fair play, nothing wrong with that. Maybe start setting up a small position on that you just average every month, and then, play around with some individual shares, buy some individual coins until you learn a lesson. Maybe you outsmart the market and you're the greatest investment guru. Great, well done. And if not, eventually, probably like many of us, will come back to more conservative investment style. So yeah, generally I wouldn't say it's never too late. I think it's always a good time to invest. It's just, again, finding what works for you and know yourself, sort of what risk level you are at. I think that's very important. And a good recommendation, hopefully all of you watching are using AI to a certain extent. I really use it myself sometimes, right? Just throw at AI, ChatGPT, Claude, whatever you're using. Just tell your life situation, right? Your age, what your income, whatever you have earnings, and say what you're comfortable with, and ask it to act as a financial advisor and give you some ideas, because a lot of people have no idea where to start even, right? And please don't take 100% what the AI tells you as a truth, right? Because once again, nobody can tell you the truth what to do with your money. But you just get an idea that's kind of more bespoke to you, rather than if you watch a YouTuber, because you, Ari, your background is completely different to mine, and maybe completely different to the viewer. So it's hard to kind of benchmark yourself to other people, because sometimes people look at my portfolio and say, "Oh, it's so big, I can never get there." And at the same time, I look at other people's portfolio who are way younger than me, and I look like, "Oh my God, what did I do wrong in my life?" Right? I'm nowhere. So it's everything is relative, right? So don't compare yourself to other people. But I think it can give you a good base to kind of see, okay, based on that vision that they outlined for me, yeah, maybe bonds could be for me, because I'm a very conservative investor. Or, well, I'm really risk taking and I want to have the highest possible return. Maybe I should go after some individual coins or tech stocks, right? So I think it can be a good starting point. If you have no idea where to start, read, of course, some good investing books. There's some good ones out there. But that could be a possible way to kind of get a feel of what you could be doing with your money.
You spoke a lot about really instantaneous gratification, whether it's needing the dividend income, whether it's needing the, what I always say, getting rich by Tuesday effect to kick in. How do we combat instantaneous gratification?
Tough one. Honestly, it's really hard in a world where everything becomes instant. I mean, it's I don't know. It's really hard. It's like I think it becomes a character trait almost, right? Because you can say the same with anything in life, like what you want, like discipline, like health, right? People, they pay thousands of dollars for private coaches, for the latest diet and so forth. When in reality, you just need to sleep well, eat well, and move well. That's it. There's literally no rocket science. If you do that consistently, it's way cheaper and it will get you 100% your results that you want. Yet people are not willing to do that. They rather, scroll TikTok on their couch, eat junk food, but then pay someone crazy money to get fit, right? And I feel that's the same in many parts of our lives. So I don't know. I think it's for me, the lesson was that I kind of burnt myself along the way. I also thought I could outsmart the market, and I thought 10% was boring, so I tried to push for more, only to realize that I couldn't. And that was for me a reality check. At what point I understood, coming back to my principle, that I rather invest conservatively and focus on what is in my control, because I cannot control what, again, companies like Pfizer, Altria, what they're doing in 2, 3, 4 years. I'm just a tiny investor, right? I'm kind of reacting to their actions. Versus if I'm investing in the sort of broad market, like an S&P or global world ETF, I'm sort of benefiting from the entire world or America doing well, while I can really actively focus on driving my income, on adding value to have more money that I can deploy in the market. So I in general like to focus on the things that are in my control. And that's why I'm generally quite positive and optimistic person, right? Because I see a lot of people, again, in Germany complaining about politics and this and that, all the things that are wrong. But these are things that they can't really control. So why would I waste my mental capacity thinking about that when I rather focus on things that are in my control? So yeah, I don't have a perfect answer to how we can work on that, but I think it's something we really need to make an effort and kind of bring that to the attention of people, that instant gratification it's once again, you kind of in that, and I think that's exactly what's happening with people on a salary, right? In the US, they're getting, I think, weekly or bi-weekly salary. That's a little carrot in front of you, right? You just do enough to get that weekly paycheck or whatever, bi-weekly, and you kind of in that sort of rut, right? And to break out of it, it's not easy, but I think once you do, like for me right now, once I left the corporate world, I start seeing so many opportunities and I want to start so many different businesses. It's like crazy. Completely shift your perspective on things and see things in a whole new perspective, which is really, like, for me, it's so eye-opening. And I think the same with investing. Once again, you have to try certain things. You have to lose some, you have to win some to understand what works for you. And I think hopefully eventually, as all of us mature with time, I think all of us eventually realize that there is, a better investing style for you than maybe chasing the latest shiny object or trend in investing.
I feel like I know I don't have to tell you this one, but it's like we're in the greatest age, the greatest era right now to start a business, to take risks. It's now easier than ever to literally get out in front of people like we're doing right now and try to produce something that's worth something. But there's a lot of fear for a lot of people, even with investing. And I want to ask you a little bit about how to overcome fear, how to look at fear maybe through a different perspective in order to break out from the monotonous day-to-day of the 9 to 5.
Sure. Very good point. I mean, I think the times we're in now, it's funny, when I spoke with my grandma the other day, she said, "Oh my God, Kai, I would not want to change with you. The times we're in, it's the worst, all these, so many conflicts around the world and the politics and all this. It's the worst time." I said, "Grandma, I completely see the opposite way. When I think 60 years ago, the times they were living in, for me, it was like way worse, right? Right now, I can literally, I'm sitting in front of my laptop, having a talk with you, reaching people all over the world, right? Helping them, inspiring them. I have run my whole business from this laptop, sitting in a beautiful place in Dubai. It's incredible, right? Like, it was not possible even 20 years ago. So I'm truly grateful for that. And the event with the emergence of AI, it's just, we all sit on such a untapped potential. There's so many things how you can monetize that and use it for you. Yet when I speak about people, about AI, let's say, so many people see it negatively, right? I tried a few times. It gives me, the answers are useless. I can't really use it for my own business. It doesn't make sense. For my industry, it doesn't work. That's the favorite one, right? In my industry, AI won't work. Yeah, sure. Honestly, it will affect everything around the world. It's just a question of time, right? So you can either, sort of belittle it and talk negative about it, or use it to your advantage. I mean, I use AI like literally, I don't know, 80% of my day. I'm in all the various ones and use it. I was building my website with it. I'm now programming certain tools on my website in HTML. I have no idea about coding, but I just tell it what I want, or I screenshot another page that I like, say replicate it in HTML. It does it for me. It's crazy, right? I mean, we're sitting on such opportunity. At $20 a month. It's just crazy, right? Like a Starbucks coffee here in Dubai costs $8, right? So it just puts things into perspective. And I agree with you. We're in amazing times, but it's up to you what you do with it. And the same with investing, right? You can choose not to do it and just spend it on things that bring you short-term pleasure. See so many people, overspending, especially again in a place like Dubai. It's so easy to get sucked into that social pressure of having to go to the fancy brunches, be in the hot beach clubs. You can spend there hundreds of dollars. I know so many people here making really good money. I mean, they pay very good money. But literally, they spend everything. By the end of the month, they have nothing. They're waiting for the next month to get the salary again, to do it all over again. And it's such a missed opportunity. I think it goes back to educating, talking about money, investing, and really understanding the benefits it can give you in the long term. And to your point of fear of leaving, it's a tough one. Honestly, I was toying with that idea of leaving my job for a long time. I never really did that because I think as you grow in your career, obviously your position grows, your salary grows. It's kind of that comfort zone, right? You feel really good. Like to leave it all behind it's really tough. But I think to really succeed, you can't be half pregnant, right? I really believe you have to really sort of jump over the river with both legs and do it all. And I taught myself, I kind of visualized myself if I'm 80, 90 years old, 100 years old, would I regret not having done it, at least tried my business? I was really picturing myself lying there and thinking to myself, Kai, like if you're there with 80, 90, would you be proud to have been a GM in 10 different countries and run the biggest hotels? And sure, it's a nice accomplishment, but ultimately I realized I'm just an employee. I'm replaceable. Like I did now, right? When I left, literally the next month they had a new person there who's now the big boss over there. Great. So it means I'm totally replaceable. So then I thought, okay, at least I give myself 1 year. And I really said 1 year. If everything fails, of course, ultimately I need to make a living, right? I need to provide. I have a wife, hopefully soon kids as well. So I need to, earn some money. So I said to myself, I had enough savings. I said 1 year, I go all in and just try it. Worst case, I can always come crawling back, knocking on the door. I'm sure I'll get a job again as a GM. That should be possible. But eventually I thought, I don't want to live with regret. I think having regret would probably be the worst feeling. And I didn't want to lie to myself. So I said, at least I want to try it. Maybe I'm the worst entrepreneur. It doesn't work. I can always come back. At least I won't have the regret of not having tried. But yeah, touch wood. Luckily, so far, it seems to be working out well. And I'm generally happy I went for it. So I can only encourage, if you have that feeling, try it. At least try it, right? If it doesn't work, I think we can always come back to former workplaces. But go for it, try it, because I think opportunities are endless and there's so much money to be made out there, which, I think it's beautiful.
Oftentimes when I ask investors what their best investment is, I always get a wide array of answers. But every now and then I get an investor who says their best investment was on themselves. And I kind of hear that in yourself, like the best investment you've made was into yourself. And I want to ask you, for the younger investors who may be out there watching this, would you recommend to first start out betting big on yourself, or would you recommend going that corporate direction, maybe working for some few years, get experience under your belt, invest a little bit into the market, asset classes, and then go out there and go big?
Yeah. Again, I think there's no general answer for anyone, right? It really depends on your personal situation, your mindset, your characteristics. Like my wife, she never worked in a corporate company. She hated the idea of working in a company. She started her business since she left university and always went for it, always tried different things. She was always entrepreneurial. Some worked, some didn't. Now she has a very successful business. So again, for sometimes it's easier to start from the beginning without having been exposed to the corporate world, because again, I know people working in Google, right, where they have free food, they get housing allowance, they have all these benefits. Like for me, for example, now having left, right, now I pay for my own phone. I never had to pay for that before. My bill, my car was paid for, my petrol was paid for, health insurance. I had all of these things I never worried about. Now I have to pay for that. I'm like, Jesus, like all these expenses, they add up, right? So it's kind of put things in a different perspective. But again, so at the same time, I'm still, let's say, for example, my kids, right? If they tell me I want to go into the corporate world and experience that, I would be all for it. I don't think we have to force people to become entrepreneurs. And I generally don't say everyone has to start their own business, because again, sometimes it might be better for you to be number 30 in Apple or number 60 in Facebook, right? You might be actually doing much better in life and have a better work-life balance than if you have your own business. So you can write on your Instagram that you're a CEO and entrepreneur of your own business, but you barely meet ends meet. You're working 24/7. So it may not be for everyone, right? I think we also have to acknowledge that. But if you have you feel the urge and the desire to run your own thing, you're tired of your boss telling you what to do, and you think you can do it better, then eventually I think just pursue it, try it out. So if by betting on yourself, that's what it takes to start your own business, I'm all for it. But of course, I think it helps to have some cushion, a little bit at least, some savings, right? If you go all in and you have no savings, I think it puts maybe too much pressure, and you might make maybe irrational decisions that you wouldn't normally take, because again, some business decisions, they take longer time, right? Like the same we're investing, right? I'm building now a business that really hopefully will benefit from SEO over time. I mean, SEO takes months until you see results, right? Because it's not something you just force your way in and spend crazy money on ads. So in that way, if I didn't have savings and that was my only business, I would be, after 3 months, have to close everything and go back to my job. So you want to be very mindful of that, to have a bit of savings. So in that way, there's a benefit maybe of having worked in a corporate career where you have saved up a bit of money. Maybe you have a property that pays you passive income in the months that can at least sustain your lifestyle. So that was the case for me, right? My Dubai apartments, they covered my monthly living expenses. So I knew actually I'm not burning through my savings. So that year was just like an arbitrary number I gave myself. It's not like I would be bankrupt at the end of the year, because still my passive income covered my living expenses. Because I'm not living a super flashy lifestyle, right? I mean, I like to live in a nice place, but I don't need to eat in fancy restaurants every night. I'm just quite, moderate, I think, in my spendings. So I think that's also important to keep that in mind, because I see too many people, again, coming back to the Dubai lifestyle, trying to blend in and fit the social of how they should be acting as an entrepreneur. That's the worst you can do. Go away from that. I used to wear all these suits and ties. I don't even know anymore how to bind a tie. I wear mostly black t-shirts now, like you do as well. I love it, and it just simplifies life so much. And so I think if you have the urge, go for it, but don't feel pressured, because sometimes I feel also a lot of these YouTubers and people online, they tell you, buy my course, I'm going to make you the greatest entrepreneur. And it's not for everyone. Honestly, a lot of the people actually fail in their business, and you might be better off being very successful in your own company or any corporate job than being forced to be an entrepreneur. So the same with investing, right? If somebody tells you you have to own Bitcoin, no, you don't have to. If you don't believe in it and you can't get behind it, then don't buy it. Because everybody talks about it in the news, it doesn't mean it's for you, right? And the same with your job, your career. But betting on yourself is big. And I would also add a second point is, investment is your significant other, your wife or your husband. I think has a huge impact, because you're going to spend a lot of time with that person. And I also see a lot of couples where money often becomes the biggest point of conflict, or even divorce in many ways, right? Let's be honest. Often many couples don't even know how much the other person earns or has. And that can really come up even later on in their marriage and bring a lot of conflict, I would say. So I'm a big fan of being very transparent about finances and talking about it openly. Obviously, my wife, I share my portfolio on my channel and so on, so it would be hard to hide that from her. But generally, we talk about also how the month went, how much we earned, and so forth. I know it can be a bit uncomfortable in the beginning, but honestly, down the road, I think it really makes things so much easier. And you also want to be aligned in your values of what you value in life, right? If let's say you are very frugal, right? You don't value any materialistic things. Like personally, I don't really do. I value experiences, but not really material. Like a brand, like a fancy brand, I couldn't care less about that. While if your partner, only wants to eat caviar, drink champagne, and have the latest brands, it's going to get some friction eventually, right? Because they have the expectations that you're going to treat them, you're going to buy them these things and so forth. So yeah, I think it's very important that you really align to not have that, because again, coming back to as an investment, if 20, 30 years down the road, you don't have a prenup and you divorce, all your smart investments, when you manage to outperform the market by some percentages and so forth, if you split that into half and, basically half your net worth is gone, that's a bad investment, right? So you want to be very mindful of that, who you marry, or at least call your life partner.
Guys, speaking of your portfolio and transparency, where about ballpark are you holding right now in terms of the value?
So I'm really happy. I was actually thinking, I was asking my wife if I should make a video about this the other day, because I felt on the one hand side it might be a bit too cheesy. And again, for some it might be very little, for some it might be too much, I don't know. But yeah, I was personally very happy to just technically on paper at least have crossed the 1 million mark. So that's 1 million euros. So in total, if I add up my portfolio and then obviously ETF and Bitcoin, at the same time, I would probably do such a video, right? But I think I want to put it from a way that it means absolutely zero, because literally it's paper value, right? As I said, tomorrow there might be a war in the region, everybody's panicking, selling. My house is literally worth nothing. And all of a sudden I go from 1 million real fast to, I don't know, $10,000, right? Because stocks can go down, crypto can go down. So it means absolutely zero. And I rather, once again, while I'm happy to see my sort of net worth and wealth growing, I really want to focus on my income growing over time, right? Passive, but also active, right? I think too many people they over idolize the idea of passive income, which I also like, right? Passive income, even though it's debatable if passive is always really truly passive, because even for my rental properties, like if I don't invest in that in the next 10 years, well, guess what? The passive income over time will drop in value because it's not going to be so nice. The rent goes down. So, it's also a sort of psychological, well, you can debate what is really truly passive, but of course I want some passive income, but also my active income, because that's something, even if my value drops, I can still generate income and then either deploy into the markets or pay my living expenses from it. So yeah, again, while I'm happy to have crossed that threshold, I wish I would have crossed it when I was 28. Okay, it's 10 years later, but so be it. But I also understand the compound effect, as you do very well yourself. So I think, they say the first 100,000 is the most difficult, and then the first million. So hopefully it gets easier with time, because 10% on a million, obviously it starts to compound. But ultimately it's just a paper value, right? The same way when you talk about Elon Musk losing or gaining, billions in a day, it's just a theoretical value. Ultimately, it doesn't really change my life. My life is my home, my wife, my little doggy. I'm happy, I'm healthy. That's what really matters. Not the value that I have in my Excel sheet that I track on a monthly basis. Is nice, yes, sure. It confirms that I'm doing the right things. But you should not, directly connect your self-worth to that net worth, so to say. I think it's a number to thrive, to grow, and that's, I think, what we all do when we invest. But you shouldn't over obsess and take it too serious, because there's going to be times when we're going to have a next recession, a bear market, and the value will drop by 30%. So am I then less of a successful person? No, I don't think so, right? It's just part of the investing cycle. And but yeah, at the same time, I'm really happy to have crossed that now.
Huge milestone. And certainly one to celebrate. So I'll be watching for that video when it goes out, which is to say, investors, if you haven't already checked out Kai's channel, definitely go and jump over there after this interview. A lot of insights on everything finance. But Kai, in order to even get to where you got, I mean, it clearly takes successful investor characteristics to get there, let alone, I want to say, just successful life skills and habits. What are 3 traits of success that you would say are absolutely imperative for all of us to embody?
Great question. The first one, very easy for me. It's about consistency. I think that's really something I really embrace for all areas of my life. Like when I was in hospitality, my corporate career, I was the most consistent one. I was always showing up. I was always there, always going above and beyond. The same with my fitness and health journey. Like I'm really disciplined. Like I love it and I know it will bring me results. So even on days when I don't want to work out or I don't want to do certain things, I know if I don't do it, it's like a vicious cycle and I will feel the consequences down the road, right? Now I stopped drinking from the beginning of this year. I set it myself as one challenge and honestly, it's been so easy, right? And honestly, I don't see myself, I don't know why I would start drinking ever again. Like I think I'm just going to continue to never drink again. And again, that's certain discipline because I've been to weddings and so on. There were so many temptations, but I know being disciplined got me to where I am today. And that will also get me much further in the future. Because even with investing, right? You can start getting all excited. You read the books, you understand, okay, now I want to be an ETF investor or dividend investor. Amazing, great. They start 1 month, 2 months, 3 months, but then they start seeing the portfolio going down, or they have a month where they had a lot of expenses, right? Maybe more than usual. So they didn't have money. So, okay, this month I don't invest, but next month I will. But guess what? Next month comes around. Again, another thing happened. So they kind of push it. And then 2-3 years down the road, I'm off my schedule, right? And then the whole compounding is pushed back so much further. So discipline, I'm all in for it, right? You got to be disciplined if you're a long-term investor. If you're a trader, maybe a different story, but I'm not a trader. I'm a long-term investor. So that's number one. Second of all, I think keeping an open mindset and always come from a point of being inquisitive, right? Being a student of life in a way, right? Like even I have a channel, you have a channel, like, people say, but you should know all these things. And so many times I say, I just don't know, right? When people ask me about, CFD trading, option trading, it's not something I do and it's not something I have an idea about. I read about it, I'm curious about it, and I try to understand it. But I haven't fully, and I'm not ready yet to get there. So why would I talk about it or put my hard-earned money in that, right? At the same time, I keep an open mind. Like, for example, cryptocurrency, I got in quite late, actually, with Bitcoin. I think it was only 2020 when I started. So I'm really quite late to the game in a way. And I kind of didn't like it for a while, but eventually I understood it might really be the future. So let's study it. And eventually I kind of convinced myself. And so yeah, be curious, keep an open mind with AI, right? Rather than pushing it away, it's going to take jobs away, it's bad for humanity. Well, guess what? Like it or not, but it's probably going to happen. So why not invest the time to benefit from it and take advantage? So I really, recommend to be curious, a student of life, study new things, and just, try to capitalize on them rather than push them away and say, well, I invested the last 20 years in bonds, so that's what I'm going to do the next 40 years. May not always be the smartest approach. And third point, what is the third point? I think in my eyes would be to, as we spoke about before, also have a long-term time horizon. Don't over-obsess on the short-term gains, because that can really lead you nowhere. You make the wrong decisions if you chase the short-term. And I see that now again. It's so sad in a way to see. When Bitcoin is at all-time high, so many people ask me, how can I buy it? How can I get in? It's the worst time, right? I mean, sure, maybe in 10 years, even if you buy now at 100K, you might still make money. I have no doubt. You probably will. Again, sort of, you're chasing the herd, right? So if you play the long game, you're going to be much better off, right? In many ways. And so I think that's really important to understand. But it all goes back to the point: try different things so you see what works for you, and so you're not chasing the shiny objects or the latest trends in investing, but what works best for you. Have a long-term time horizon and focus on what you can control, which is your income, and then just deploy it in the markets. And you should be good over a long time horizon, I'm pretty sure.
Kai, the biggest mistake investors are making today, what do you think it is, and how do we avoid it?
I would say that probably. They kind of invest in things that they don't fully understand, and they invest in things that they read online, that some of the social media influencer told them about, that they should be buying. And they just do it because they were told to, right? Without making their own research or broadening their understanding about that. And again, it doesn't mean you have to spend hours and hours and go to seminars to understand what ETFs are, right? But just the basic understanding: what is it, how does it work, do I feel comfortable with it? I think that's the bare minimum in order to deploy your own money into that. And that's really the biggest problem. And I see young people making this. They're more prone to that because they're constantly on their phone. They see a big influencer, buy that meme coin, you got to be the next millionaire. I invest in that. Well, guess what? Guess who is behind that project, right? They're selling before you even know, and you're going to be the one losing your money. So that doesn't work. But even, as I said, elderly people, they also want to get in on it, and they chase high yield. We spoke about dividend yield traps. They chase crazy meme coins and things that just don't make financial sense. And the good old saying, if it's too good to be true, if it sounds too good, well, most likely it's just is, right? And so I think that's the biggest mistake that people do these days. So sometimes boring is actually better, and just focus. I'm a big fan of focus on growing your income and then invest conservatively over time.
One of the wisest approaches. Kai, if I were to fly any investor icon over to Dubai to have one of these luxury dinners that we always see on social media in Dubai, what investor icon would it be? And you can bring them back from the dead if it's someone who's since passed. And what would the conversation be like? What type of questions would you ask?
That's a great question. I mean, from the dead, I don't know any, but I would have to say, which probably a lot of your guests say, but Warren Buffett. I think he's just such a legend. I think it would be, I always thought of one day hoping to have a chance to go to the meetings they do, these annual meetups. I think they're so epic. He's such a legendary investor. And while in recent years, I kind of sort of wouldn't say I really 100% agree with all his investment styles, there's no denying that he is one of the smartest guys out there. His vision, and just such a gentleman also, right? The humor, the approach he has, I really love it. Again, when we come to crypto and tech stocks, we see things a little bit different. But I would really just kind of want to hear some some stories that he experienced, how he started investing. Obviously, he's well documented, right? You can read all these things, but just meeting him in person, I would be a true honor and a pleasure, I would say. Is there a specific question I would ask him? No, because obviously I read a lot of his books and watched his videos, so I feel like I know him already quite well. But I think he's just such an inspiration and definitely one of the person that got me invested. Also, when I started investing, I read a lot of his investment letters, and it really inspired me. Sort of that value investment and more conservative approach, right? Which I maybe got from him, right? So yeah, he is definitely an icon I will always cherish and look up to, and grateful for impacting me as an investor that I am today.
My last question for you, Kai. If I were to throw you $10,000 right now, where would you invest it and the why behind the investment?
Pepe meme coin, of course. It will 50x in the next 2 days. Invest now, Ari. You should. No. If you give me $10,000?
$10,000. We can even make it 10,000 euro for you.
No, dollars is fine.
Sweeten the deal.
Honestly, I would probably split it. I'm just thinking about a split percentage. I would probably split it 60-40. I would invest 40% of it, so 4K into Bitcoin, even at an all-time high. I don't know if you saw it today or yesterday. I think today. Michael Saylor bought, I think, the biggest amount of Bitcoin you ever bought before at $97,000. So if one of the smartest guys in the crypto space still buys now, I still think we have a long way to go. So I would still allocate some money, even at an all-time high now, 40%. And the other 60%, very boringly. So of that 60%, I would invest 60% in the S&P and 40% in the NASDAQ 100. That would be that.
Keeping to the strategy. That is the name of the game.
That's it. Consistency. It's all about consistency. Absolutely.
There we go. And that's how we get smart money with Kai. Investors, like I said, Kai's channel is absolutely incredible. I had to bring him on the moment I landed on Kai's channel. It's everything and more about investing and finance, just being smart with your money. It's all there in the name. Kai, I want to say thank you so much for joining me on Masters of the Market. And investors, until the next go round, we will see you all there.